What's going on YouTube and social media? Let's talk about the basic account need if you want to start a business. Now, in this video, we're going to do a beginner-friendly guide of business finances and accounting.
You don't need a business degree. And, you may want to take an accounting class at the local community college. That wouldn't hurt anything to begin to understand accounting, especially if they have a course designed for entrepreneurs, for small business people.
The basic account language that you need to understand for business, using numbers to tell the story of the company and financial health, help you make smart decisions. Now, before I get into all this, I'm going to tell you, I own a bunch of business. I still do a lot of business work. And I didn't know anything about accounting, anything about business when I started. And I'm just trying to help you figure out the basic things you need to know about accounting. Now, will you need to hire an accountant after a while if it gets big enough? Yes. Will you need to know the basics so you don't get screwed over? Yes. So, this video is going to help you understand the basics so you do not lose money and that you understand the real story behind your finance. Now, the very first thing I'm going to tell you is you need to understand your income statement. This is the profit and loss. This statement shows you your revenue, which is the money in, and expenses, your money out. And ultimately, your profit or loss. It's a key point of it.
What is an income statement? An income statement is a financial statement that summarizes a business's revenues and expenses over a period of time. We start with revenue and subtract expenses to see if it made a profit or a loss. For this reason, the income statement is also called the statement of profit and loss.
Profit does not equal cash. Profit loss just shows you how well the business is doing. Now, this is the thing. If you just go off of the profit statement, you might be in a bad situation because sometimes it doesn't add everything up. The biggest part that you need to understand about the profit and loss statement is just a quick summarization that you can go over. And this is what a income statement looks like, and here's a short video about it.
Here's how to build an income statement with year-over-year comparisons. Your revenues are growing, but so are your cost of goods sold. The good news is you're getting more profitable. Your gross margins are increasing from 60% to 64%, and your revenue is growing 15% year-over-year. Your expenses are also growing because your business is growing. But the good news is, as a percentage of revenue, your costs are actually decreasing from 30% to 27%.
Now, that we know what the income statement is. It's pretty simple. It's just telling you how much money is coming in and how much money is going out. So per deal, per everything else, it makes you understand, hey, this is my income statement. This is my profit and loss per deal and every month to month. Now, one of the biggest part of understanding business is the cash flow statement. Now, this is a really important one to understand. This tracks the actual money moving in and out of your business. So essentially for covering your bills, expenses, if something breaks down, it'll show you in there. It'll show you
kind of how to tie together what's happening on the income statement and what's happening on the balance sheet. And so it's kind of a missing link, if you will. But what the statement of cash flow shows us is it shows us over a period of time, where has the money gone? So what this shows us is all of the money coming into, and also separated into three different categories: operating, investing, and financing. And so up at the top, this is where most small businesses are going to see most of the action. And this is in operating activities. So this is kind of mirror what's happening on your income statement, and then also any changes in your short-term assets and short-term liabilities.
It breaks it down into operational fees, investing, financial activities. And I stress out that a profitable business can still fail without a sufficient cash flow. You might not understand this, but you can have a profitable business and still have no cash flow and have a company close down because you don't have the money to run it. And this is the thing that you need to understand about cash flow. Cash flow is the actual money coming in and out of the business. So this is the one of the biggest part that you need to look at. When I look at business, I look at the cash flow for one of the key concepts of the business. And here's a video of what a cash flow statement really is. So you can.
What's the difference between an income statement and a cash flow statement? On an income statement, you can find revenues and expenses for a specific period. For example, if in 2022 your company generated $120 in sales and spent $50 on marketing, your net profit would be $70. You can compare these numbers to previous year's figures and assess whether your business is doing better or worse. A cash flow statement shows the inflow and outflow of cash for a specific period. There are generally three types of activities: operating, investing, and financing. Let's continue with the example above. Your net profit was $70, but the customer still owed you $20. You purchased a camera for $30 and borrowed $100 from the bank. Your cash balance at the end of the year would be $120.
The third and final thing that you need to understand for basic account. Remember, this is just a basic. It's nothing too complicated so you can understand everything. It's the balance sheet. This provides a snapshot of your business owned assets and your liability. So it tells you how much equity is in the company, and it reflects if your business is strong or a risk of your business.
Is a snapshot of your company's financial position at a specific point in time. First, assets. These are what your business owns, like cash, inventory, or equipment. Second, liabilities. These are what your business owes, such as loans, bills, or debts. And equity. This is the owner's share in the business, calculated as assets minus liabilities. The balance sheet follows a simple formula, which is assets equals to liabilities plus equity. Why is this important? It helps you understand your company's financial health and make better business decisions.
And that's a big thing you need to understand. Now, a balance sheet tells you how much your company is worth, and this is very important for you to understand because it adds up everything you own and subtract it from your liabilities. And if you don't want to know anything about it, here is a video about the balance sheet so you can understand it more in detail.
And a balance sheet. An income statement shows how much revenue you generated or how much expenses you incurred over a period of time. For example, from January to December, you generated $50,000 in revenue and incurred $35,000 in expenses. A balance sheet shows how much assets, liabilities, and equity you have at a point in time. For example, as of December 31st, you have $10,000 in cash and $15,000 in debt.
I want to tell you some of the most common mistakes and important distinction in some of this. Revenue versus profit. Revenue is the total money received before expenses, while profit is what's left after all the expenses are deducted. This is the big one that you need to understand. Cash versus accrued accountant. Cash account records transition when money change hands, while accrued accountant records revenue when earned and expenses when occur. Provide more realistic picture of the growth of the business. These are some of the definitions you need to know the differences, and I'll put some screenshots of what each one is and show some examples so you can see it on the screen. This is revenue versus profit, and this is cash versus accrued account. Hopefully this all makes sense. So in this video, I conclude that understand the basic helps business owners make confident decisions rather than guessing. Now, you don't need to have an accounting degree to understand this, but consistent tracking and regular reviewing your numbers will help you understand how your business do as a responsible business owner. So like and subscribe to my video. That's just the basic. If you need to know more, please talk to an accountant because everyone needs to know the basic whenever it comes to accounting.